Hi, welcome to the weekly episode of Let's Talk Bonds by INR Bonds. I'm Arjun Patsati. And in Let's Talk Bonds, we bring you all the fixed income options available to you for investments and how to get the best out of your fixed income investments given the options available in the market. And what we found in last year, in the last financial year, which is from 1st April 2021 to 31st March 2022, that bonds, especially bonds which are yielding higher, have outperformed all other fixed income products by a very, very wide margin. I'll come to that, but let's see first what are the options available to you. Now, while yields have gone up in all bond categories, so 3-year government bond yield has gone up to closer to 5.4%. 5-year is at 6.34%. Then you have 10-year at 6.81%. All these yields have gone up by at least about between 80 basis points, 0.8% to 1%, or even higher. 15 to 30-year yields are at 7.15% to 7.3%. So if the bonds are government bond yields stabilize, state development loans are around 7.25%. And if the yields stabilize, then for the next 1 year, so you can expect this kind of returns in government bonds and SDLs. Bharat bond ETF 10-year is at 7.02%. And below the 5-year, 3-year Bharat bond yield is just below 6%, while the 1-year Bharat bond ETF yield is below 5%. And in terms of corporate bonds, 2-year bonds are around 6% or slightly below, 3-year between 6 to 6.5, and 5-year between 6.5 to 7%, depending on the issuer. These are all AAA rated bonds. And coming down to the lower rated bonds, you have perpetual bonds, which are SBI, Bank of Baroda. All these are trading in a 7% to 7.5, sometimes 7.6 to 7.75 range also, depending on the issuer. But largely the PSUs, the main PSU banks, are trading in this kind of range. So you have 2-year perpetuals, 3-year perpetuals, and 5-year perpetuals of SBI, Bank of Baroda, Canara Bank, Punjab National Bank, and others. And many of these banks are also coming out with new perpetual bonds. They will start to issue the bonds this starting April 2022. In other bonds as well, you have AA rated and or A-rated bonds in the space of NBFCs and microfinance companies, trading in a range of around 8.5% to 10%, in a maturity range of around 1 to 3 years or 4 years, mostly 1 to 3 years. And you have bonds which are in the 5 to 10-year range at 10.5 to 11%. This would be something like a Piramal 10-year bond or Swatantra Microfinance, which is around over 11% levels. And in private placements, what we saw last week was UPPCL, the Uttar Pradesh Power Company Limited, fully state government guaranteed bond rated A plus by the rating agencies. They issued a strip, RPP, which is separately traded redeemable principal parts. Total maturity was 10 years, and the redemption will happen every year from 3rd year onwards, 3, 4, 5, 6, 7, 8, 9, 10. And each redemption, the coupon rate was for this bond was 9.7%. And this bond is going to see active trading. The 3-year bond should at 9.7% could look attractive if people are willing to accept the UP state government risk, because it's a fully government guaranteed bond, state government guaranteed bonds. In other private placements, Exim Bank came out at 3-year issue at 5.4%, while Fullerton came out with 3-year at 6.8%, while Canfin Homes came out with 3-year issues at 6.85% as well. So a lot of these issuers are doing 3-year issues, given that given that outlook for interest rates and the appetite in the market. There was Karnataka Bank that came out with 10-year perpetual at 10.7%. This was rated A by CRAF, while Cholamandalam and Vivriti issued 3-month T-bill linked bonds, floating rate bonds, while IIFL Wealth came out with 9-year issue GSEC linked bond again. So some of these were some other issues that took place last week. And going back to the main subject line today, high yield bonds outperform. So last year we saw very poor performance by the in FDs and fixed income funds. Most of the fixed income funds gave returns of below 5%. This includes short-term liquid, ultra short-term. Only medium-term funds gave 6% returns. GSECs gave very low returns as well, just around 2 to 3%. So it stayed because all the yields have gone up. And so returns were just all below 5%. Whereas if you take bonds, for example, you had 2-year AAA bonds and others giving returns of just over 5%, 5.5%. But the biggest came from the higher yielding bonds, anything over 8% kind of bonds rated AA and A. They have given returns, even perpetual bonds have given returns of 8 to 10% on an average. So clearly the outperformance has been in a range of 3% to 5%, which is very high in fixed income markets at a time when returns have been rising yields have been rising very sharply in the last 1 year. So you had even SBI perpetual giving 1-year returns of around 8%, Bank of Baroda giving returns closer to 10% on the perpetual bond. These are all SBI is 5-year bond and Bank of Baroda is 3-year callable bond, 3-year callable. All these are call based on call dates. And in other bonds, you had NBFCs and AA and AA minus like TVS giving 8.5%. You had microfinance companies giving like Ashirwad and Sudhatra and Muthoot Microfinance giving something like closer to 10% kind of yields. And Piramal, obviously, 10-year bond, but that was just issued recently. The Piramal bond also did outperform, largely because the yields also came down sharply for those bonds, despite rising interest rates. So clearly the outperformance has been very heavy, higher yield, and this trend looks to continue going forward because of the fact that interest rates are rising. Government bond yields will go up once the borrowing starts, and pulling all other highly rated bonds along with it. Whereas higher yielding bonds are still offering a wide spread over the wide difference between the short-term rates, and the investors are flocking to high yield bonds. Obviously, they need to be aware of the risk and should know the bond they want to have to invest in. But obviously, if once they follow our podcast, Let's Talk Bonds, and all others talk on bonds that we put out on YouTubes and videos, etc. This will help them to select the best bond option available for them to invest in, or the best fixed income product available for them to invest in to gain that extra return, where all others are returning very low levels. Do follow us on all the podcast channels, YouTube, Amazon Music, Spotify, and Apple Podcast. And do subscribe to our podcast. And do not forget to download our app, Quick Invest by and other bonds, where you can invest in the best performing bonds available in the market, and which will continue to see our performance if everything goes right, and you know which bond you're buying in, which will suit your risk profile. Thank you very much for listening.